Hi dear traders! The highlight of the week is certainly the US non-farm payrolls. This government report provides the key metrics to judge economic conditions in the US because consumer spending accounts for the lion's share of the US GDP. To encourage personal spending, consumers should be employed with steadily rising wages. How could such metrics have changed in September? Let's discuss these and other issues in our regular video calendar on InstaForex TV channel. For a start, let's recall yesterday's event when the Reserve Bank of Australia decided to raise the key interest rate moderately by 0.25%, defying expectations for a sharp rate hike of 50 basis points. All in all, the cash rate rose to 2.6%. Nevertheless, markets gave a muted response to the news, though a logical response would be active sell-offs of the Australian dollar. The thing is that traders are regaining their appetite for risks this week, which is the first week both of the month and the final quarter this year. On Thursday morning, market participants will get to know the data on Australia's trade balance. Apparently, traders will find an excuse for active speculations, opening long positions on the Australian dollar. Foreign trade is expected to revive in August following an unexpected fall in July. China, the major consumer of Australian commodities, terminated the lockdown. Hence, its industry is now clicking into gear, which implies expansion of commodity exports from Australia. At the same time, investors are alarmed by dismal economic conditions in Europe. Downbeat economic data from the euro area assures investors to flock to safe haven assets, namely the US dollar. By the large, European capital investments and large business are being relocated to the US. Small businesses are going bankrupt. The reason is obvious: they cannot afford sky-high energy bills. On Thursday, the investors will find fresh evidence of the negative dynamic in Germany factory orders. On Friday, market participants will be discouraged by shrinking industrial production in Germany. The German industry is considered the powerhouse of the whole European economy. Apart from that, soaring energy prices, German factories are suffering because of disrupted supply chains amid the hostilities in Ukraine and weak demand due to high consumer prices. Besides, employment in the manufacturing sector is growing at the slowest pace in the last 19 months. This week, market participants will have to digest a flood of employment reports. Apart from the US, Canada will also report on its labor market. Experts predict that the Canadian economy created 20,000 jobs in September, following 3 weeks of layoffs. The news will trigger an increase in long positions on the Canadian dollar. In the wake of the publication and on the condition that positive expectations come true, the American-Canadian dollar pair is likely to trade steadily without sharp swings because market participants will shift focus toward the crucial event in the US that we mentioned in the introduction to our video calendar. Analysts presented another weak forecast compared to previous employment readings. The consensus suggests that the US economy added just 250,000 jobs in September. Let me remind you that experts consider the US labor market healthy on condition it creates 200,000 jobs per month on average. Recently, actual employment readings turned out to be higher than expected, thus increasing the likelihood of further aggressive policy moves of the Federal Reserve, which is making determined efforts to bring down inflation to the annual rate of 2%. Therefore, another upbeat employment report will confirm the scenario of the next rate hike by 75 basis points. Notably, the JOLTS report on job openings published yesterday raises doubts about robust hiring last month. The number of vacancies in August in the US was the lowest since June 2021. These events will be in the limelight among investors in the second half of this trading week. Don't miss our daily news reports to be always in touch with the latest news. See you!